Before you place your next trade, you need to hear this. Every trader wants control, but control is what destroys them. You've felt that panic. The chart moves against you, and your brain whispers, do something, anything. You click buy, you click sell, you chase the movement like it's running away from you. And somehow, the more you try to control the market ends up controlling you. This isn't a story about strategy or indicators. This is about the hidden war happening inside your mind every time you open a chart. Today, you'll finally understand why your brain trades against you, and more importantly, how one man's most ignored teaching could completely reshape your trading career. Warren Buffett has given thousands of interviews, written countless letters to shareholders, and shared wisdom that has created more millionaires than perhaps any investor in history. Yet there's one teaching he repeats over and over that traders completely ignore. It's not about picking stocks. It's not about reading financial statements. It's about something far more fundamental, something that sits at the core of every trading decision you'll ever make. The teaching is this: your favorite holding period should be forever. Most traders hear that and immediately dismiss it. They think Buffett doesn't understand their world of charts and candlesticks, of scalping and day trading. They think his advice doesn't apply to them because they're not buying and holding blue-chip stocks for decades. But they're missing the deeper truth hidden inside those words. The teaching isn't really about holding periods. It's about the psychology of permanence versus the psychology of panic. Think about how you approach a trade right now. You enter a position, and immediately your mind starts calculating exit points. Where will you take profit? Where will you cut losses? How long will you hold? Your brain is already planning the escape before you've even given the trade a chance to work. This isn't strategy. This is fear, masquerading as preparation. Buffett's teaching about holding forever isn't about never selling. It's about entering every investment with the mental framework that you could hold it indefinitely if the fundamentals remained strong. This psychological shift changes everything about how you evaluate opportunities, how you handle volatility, and how you make decisions under pressure. When you enter a trade thinking you might hold it forever, you become incredibly selective about what you buy. You can't afford to be wrong if you're planning to hold for decades, so you research deeper. You wait for better setups. You demand higher probability opportunities. The psychology of permanence forces discipline that the psychology of quick profits never could. But there's something deeper happening here, something that most traders never recognize about their own minds. Your brain is wired for survival, not for trading. Every instinct that kept your ancestors alive is now working against you in the market. When you see a red candle, your amygdala triggers the same fear response that once helped humans escape from predators. When you see a green candle shooting up without you, your brain floods with the same FOMO that once drove humans to compete for scarce resources. These aren't character flaws. These aren't weaknesses you need to overcome. These are deeply embedded neural pathways that have been carved into your brain over millions of years of evolution, and they're completely unsuited for the modern reality of financial markets. The market doesn't care about your survival instincts. It doesn't respond to fear or greed or hope or desperation. It moves according to the collective psychology of millions of participants, supply and demand dynamics, and forces far beyond any individual trader's control, yet your brain keeps treating every trade like a life or death decision. This is where Buffett's ignored teaching becomes revolutionary. When you approach trading with the mindset of forever, you bypass the survival circuits that cause panic. You stop treating every market movement like an emergency that requires immediate action. You start thinking like an owner instead of a gambler. Consider what happens in your mind when you place a trade with a short-term mentality. You watch every tick. Every small move against you feels like a threat. Every small move in your favor feels like validation, but also creates anxiety about giving back gains. Your nervous system is constantly activated, constantly ready to fight or flee. This state of hypervigilance is exhausting, and it leads to poor decision-making. Now imagine placing that same trade with Buffett's forever mentality. You've done your research, you believe in the long-term direction, you've sized the position appropriately for a hold that could last years. Suddenly, the day-to-day noise becomes irrelevant. A small pullback doesn't trigger panic because you're thinking in months and years, not minutes and hours. Your nervous system remains calm. Your decision-making stays rational. This is the hidden power in Buffett's most ignored teaching. It's not really about holding period at all. It's about rewiring your brain's response to uncertainty. The cruel irony is that most traders know this intellectually, but they can't implement it emotionally. They understand that patience creates better results, but they can't sit still when the market moves. They know that long-term thinking reduces stress, but they can't stop checking their positions every few minutes. The gap between knowing and doing is where most trading careers quietly die. Warren Buffett learned this lesson the hard way, and it cost him more than most people will ever imagine. In 1964, he made what he later called the dumbest investment of his career. Not because he lost money, but because he let his emotions override his principles. Buffett had been buying shares of Berkshire Hathaway, a failing textile company, as a cheap way to get cash back through liquidations. The company's president, Seabury Stanton, offered to buy back Buffett's shares for $11.50 each. Buffett agreed. But when the written offer came, it was for $11.37.50. Stanton had shaved 1/8 of a point off the verbal agreement. Most investors would have grumbled and taken the deal anyway. The difference was trivial, but Buffett was furious. He felt cheated, disrespected, taken advantage of, so instead of selling, he bought more shares out of spite. He launched the only hostile takeover of his career, gained control of Berkshire Hathaway, and spent the next 20 years trying to make a dying textile business profitable. Decades later, Buffett calculated that this emotional decision cost him $200 billion. If he had put that money into insurance businesses from the beginning instead of wasting it on textiles, Berkshire would have been worth exponentially more. $200 billion lost because he couldn't control his emotional response to being cheated out of 12.5 cents per share. This story reveals the devastating cost of trading from emotion instead of logic. Even the greatest investor in history isn't immune to the psychological traps that destroy wealth. The difference is that Buffett learned from this mistake and built his entire philosophy around preventing it from happening again. The forever mentality became his psychological armor against emotional decision-making. When you're thinking in decades, you don't get triggered by small slights or temporary setbacks. When you're focused on long-term fundamentals, you don't let pride or anger drive your choices. When you're committed to holding quality investments indefinitely, you stop looking for reasons to sell when things get uncomfortable. But here's where most traders misunderstand the application. They think Buffett's teaching only works for stock investing, not for active trading. They think you can't apply forever thinking to short-term positions. This is where they're wrong. The forever mentality isn't about literally holding every position forever. It's about approaching every decision with the psychological framework of permanence. It's about asking yourself, before you enter any trade, would I be comfortable holding this position if I couldn't exit for a year? If the answer is no, you shouldn't take the trade. This simple filter eliminates 90% of the impulsive, low-probability setups that destroy trading accounts. It forces you to wait for opportunities with such strong fundamentals, such clear directional bias, such favorable risk-reward ratios that you could theoretically hold them through any reasonable amount of volatility. When you start thinking this way, something magical happens to your trading psychology. The constant anxiety disappears, the need to check positions every few minutes fades, the urge to overtrade diminishes, you become selective, patient, and calm. These aren't just nice feelings, they're the mental states that produce consistent profits. Most traders never experience this transformation because they never fully commit to the forever mentality. They try to apply it partially, holding some positions longer while still scalping others. They understand the concept intellectually, but haven't rewired their emotional responses. They want the benefits of long-term thinking without giving up the addiction to short-term action. This partial commitment is worse than no commitment at all. It creates internal conflict between your long-term goals and your short-term impulses. Your brain gets mixed signals about what's important, what's dangerous, and what requires immediate attention. The result is increased stress, decreased performance, and eventual burnout. The traders who successfully implement Buffett's ignored teaching make a complete psychological shift. They stop measuring success by daily profits and start measuring it by the quality of their decision-making process. They stop looking for the next trade and start waiting for the right trade. They stop trying to predict tomorrow and start positioning for next year. This shift requires more than just changing your time horizon. It requires changing your entire identity as a trader. Most traders think they know who they are. They call themselves scalpers, or swing traders, or day traders. They define themselves by their timeframes, their strategies, their preferred markets. But these are just labels describing behavior. They're not identity. They're not the deep psychological foundation that determines whether you succeed or fail in the long run. Your identity as a trader isn't what you do, it's how you think. And if your thinking is still rooted in the need for constant action, for immediate results, for control over outcomes, then you're operating from an identity that will eventually destroy you. The transformation Buffett's teaching creates isn't about changing what you trade, it's about changing who you are when you trade. Think about the difference between a gambler and an investor. They might place the exact same bet on the exact same stock, but their internal experience is completely different. The gambler is anxious, hopeful, desperate for the outcome to validate their choice. The investor is calm, prepared for either outcome, focused on the process rather than the result. This difference isn't in their strategy, it's in their identity. The gambler derives self-worth from being right. The investor derives self-worth from making sound decisions regardless of outcomes. One identity creates suffering, the other creates peace. When you truly embrace the forever mentality, you stop being someone who trades and become someone who thinks. You stop measuring yourself by your win rate and start measuring yourself by your decision quality. You stop needing the market to make you feel good and start finding satisfaction in the discipline itself. This identity shift is what separates the professionals from the perpetual strugglers. Professional traders don't trade differently because they have better strategies. They trade differently because they have a different relationship with uncertainty, with loss, with the entire concept of being wrong. Watch how a professional responds to a losing trade. There's no emotional upheaval, no self-recrimination, no desperate need to make it back immediately. They analyze what happened, extract whatever lesson might be available, and move forward with complete emotional equilibrium. This isn't because they don't care about money, it's because their identity isn't threatened by temporary setbacks. The amateur trader experiences each loss as an attack on their competence, their intelligence, their worth as a person. They take it personally because they haven't separated their sense of self from their trading outcomes. Every red day becomes a crisis of confidence. Every missed opportunity becomes evidence of their inadequacy. Buffett understood this distinction decades ago. His investment in Coca-Cola wasn't just a bet on a beverage company. It was an expression of his identity as someone who thinks in decades, who values durability over excitement, who finds comfort in predictability rather than volatility. When Coca-Cola's stock price fluctuated, Buffett didn't question his decision. He didn't panic about temporary drawdowns. He didn't consider selling during market corrections. His identity as a long-term owner made short-term price movements irrelevant. This isn't stubbornness. This is the psychological peace that comes from aligning your actions with your deepest beliefs about how wealth is created. Most traders never develop this alignment because they never commit fully to any single approach. They try value investing for a few months, then switch to momentum trading, then experiment with option strategies, then dabble in Forex. Each time they switch, they reinforce the identity of someone who is searching, someone who is uncertain, someone who believes the answer lies in the next system, rather than in mastering themselves. The forever mentality forces commitment. When you approach trading with the psychological framework of permanence, you can't afford to be casual about your choices. You have to develop conviction. You have to build expertise. You have to become the kind of person who can hold positions through volatility because you understand something deeper about value creation. This process is uncomfortable because it requires admitting that most of your previous trading was driven by impatience rather than insight. It means acknowledging that your constant searching for better strategies was really an attempt to avoid the hard work of developing discipline. It means accepting that the market doesn't owe you quick profits just because you're willing to take risks. But this discomfort is temporary. What emerges on the other side is a completely different relationship with trading. You stop feeling like you're fighting the market and start feeling like you're participating in it. You stop trying to extract money from unwilling participants and start looking for situations where your patient capital can be genuinely useful. The market begins to feel less like a casino and more like an ecosystem where patient, thoughtful participants are rewarded over time. This shift in perception changes everything about how you approach each trading day. Instead of waking up wondering what opportunities you might miss, you wake up wondering what opportunities might be worth your attention. Instead of feeling pressure to trade, you feel privilege in being selective. Instead of anxiety about profits, you feel confidence in your process. These aren't just emotional benefits. They translate directly into better performance. When you're not constantly fighting your own psychology, you make clearer decisions. When you're not desperate for immediate results, you can wait for better setups. When you're not afraid of being wrong, you can cut losses quickly without ego getting in the way. The transformation happens gradually, then suddenly. You realize you haven't checked your positions in hours. You notice you're not interested in the latest market gossip or trading tips. You find yourself naturally gravitating toward higher quality opportunities and naturally avoiding the low probability setups that once tempted you. This is what Buffett's ignored teaching really offers. Not a new strategy for picking stocks, but a new psychology for approaching uncertainty. Not a better way to time the market, but a better way to think about time itself. Not techniques for controlling outcomes, but wisdom for controlling your response to outcomes you can't control. The irony is that by giving up the illusion of control, you gain actual control. By accepting that you can't predict short-term price movements, you free yourself to focus on long-term value creation. By admitting that individual trades don't matter much, you liberate yourself to make each trade with complete emotional detachment. This detachment isn't indifference. It's the profound calm that comes from knowing you're playing a game you can actually win. Instead of trying to outguess millions of other traders in the short term, you're positioning yourself to benefit from the long-term trends that create real wealth. When you watch Buffett in interviews, you can see this calm in his demeanor. He's not anxious about missing the next hot stock. He's not worried about quarterly performance. He's not concerned with what other investors think about his positions. He has the psychological peace that comes from playing a different game entirely. Most traders never experience this peace because they never commit to playing the long-term game. They want the benefits of patient investing without giving up the excitement of active trading. They want the stability of buy and hold returns with the flexibility of day trading liquidity. This internal contradiction creates constant stress and prevents them from excelling at either approach. The forever mentality resolves this contradiction by changing the entire framework. You're not choosing between short-term and long-term thinking. You're choosing between reactive thinking and intentional thinking. You're choosing between being driven by market movements and being guided by your own analysis. This shift affects every aspect of your trading. Your position sizing becomes more thoughtful because you're planning to hold through volatility. Your entry timing becomes more patient because you're not trying to catch every small move. Your exit criteria become more systematic because you're not making emotional decisions based on daily fluctuations. Even when you do trade shorter timeframes, the forever mentality changes your approach. You're looking for setups that align with longer-term directional bias. You're avoiding trades that depend on perfect timing or favorable luck. You're thinking like an owner even when you're only holding for days or weeks. The psychological benefits compound over time. Each trade executed with this mentality reinforces your identity as someone who thinks clearly under pressure. Each decision made without desperation strengthens your confidence in your own judgment. Each period of patient waiting proves that you don't need constant action to feel productive. Eventually, you realize that trading has become a reflection of who you are rather than something you do to become someone different. You're not trading to escape financial limitations or to prove your intelligence or to feel important. You're trading because you've developed genuine skill at recognizing value and genuine patience to let that value be realized over time. This is the deepest level of Buffett's ignored teaching. It's not really about investing or trading at all. It's about developing the kind of mind that can see clearly in situations where most people are blinded by emotion. It's about becoming the kind of person who can remain calm when others are panicking, who can think independently when others are following crowds, who can act decisively when others are paralyzed by uncertainty. These mental qualities extend far beyond financial markets. They affect how you handle stress in relationships, how you make career decisions, how you respond to unexpected challenges in any area of life. The forever mentality isn't just a trading philosophy. It's a framework for approaching any situation that involves uncertainty and long-term consequences. When you understand this deeper application, you realize why Buffett's teaching is so consistently ignored. It's not really about making money faster or easier. It's about becoming a different kind of person. And most people would rather change their strategy than change themselves. But the traders who do embrace this transformation discover something remarkable. They don't just become better at trading, they become better at living. The same psychological skills that create calm in volatile markets create resilience in difficult life circumstances. The same mental discipline that prevents emotional trading decisions prevents emotional decisions in general. The market becomes a training ground for developing the most valuable skill of all, the ability to think clearly when thinking clearly matters most. This understanding creates a paradox that most traders never resolve. The harder you try to control the market, the more it controls you. The more you chase certainty, the more uncertainty overwhelms you. The faster you try to get rich, the quicker you lose what you have. Your brain doesn't understand this paradox because it's designed for a world that no longer exists. 10,000 years ago, quick reactions meant survival. Hesitation meant death. Grabbing resources before others could meant your family ate tonight. These instincts served your ancestors well in a physical world with immediate cause and effect. But financial markets operate on different rules entirely. What feels like immediate danger is often just noise. What appears to be a missed opportunity is frequently a disguised disaster. What seems like the right moment to act is usually the worst time to move. The disconnect between your ancient brain and modern markets creates a constant state of internal warfare. Every trade becomes a battle between what you know intellectually and what you feel viscerally. Most traders lose this battle because they don't even realize it's happening. They think their problem is technical analysis or risk management or position sizing. They study more indicators, read more books, attend more seminars. But their real problem is neurological. Their brain is fighting against their success at the most fundamental level. This is where Buffett's teaching becomes truly revolutionary. The forever mentality doesn't just change how you think about time, it rewires how your brain responds to uncertainty itself. When you approach every decision with the psychological framework of permanence, you activate different neural pathways. Instead of triggering the amygdala's fight or flight response, you engage the prefrontal cortex's planning and reasoning functions instead of releasing stress hormones that cloud judgment. You maintain the calm neurochemistry that supports clear thinking. The transformation isn't just philosophical, it's biological. Consider what happens in your nervous system when you place a trade you're planning to hold for years versus one you're planning to exit in minutes. The long-term trade activates patience circuits. The short-term trade activates anxiety circuits. Same market, same money, completely different internal experience. This neurological difference affects every aspect of your decision-making. When your stress response is activated, your peripheral vision narrows. You literally cannot see opportunities that exist outside your immediate focus. Your working memory decreases. You cannot hold multiple variables in mind simultaneously. Your risk assessment becomes distorted. You either underestimate danger or become paralyzed by it. But when you're in the calm state that comes from long-term thinking, your perception expands. You can see patterns that stressed minds miss. You can consider multiple scenarios simultaneously. You can accurately assess probabilities without emotional distortion. The forever mentality creates this optimal cognitive state not through willpower, but through expectation management. When you're not expecting immediate results, your brain doesn't prepare for immediate threats. When you're not looking for quick exits, your mind doesn't scan for escape routes. When you're not trying to time perfection, your nervous system doesn't amp up for precision performance. This relaxed alertness is the mental state that produces consistent profits. It's also the state that most traders accidentally train themselves out of through constant stimulation and immediate gratification seeking. Every time you check your positions obsessively, you're training your brain that trading is an emergency requiring constant vigilance. Every time you close a position early out of fear, you're reinforcing the neural pathway that says uncertainty equals danger. Every time you overtrade from boredom, you're strengthening the connection between inactivity and anxiety. These patterns become automatic over time. Your brain learns to associate trading with stress, markets with threat, and uncertainty with the need for immediate action. Eventually, just opening your trading platform triggers a physiological response that makes good decisions nearly impossible. Breaking these patterns requires more than changing your strategy. It requires retraining your nervous system to associate trading with calm rather than chaos, patience rather than panic, and long-term value creation rather than short-term extraction. The forever mentality accomplishes this retraining naturally. When you genuinely believe you might hold a position for years, your brain stops treating every market tick as urgent information. When you're truly committed to long-term thinking, your nervous system stops preparing for constant combat. This shift doesn't happen overnight. Your brain has spent months or years learning that trading equals stress. It will take time to unlearn those associations and build new ones. But the process begins immediately when you start applying the forever framework to your decisions. The first sign of change is usually a decrease in the compulsive need to check positions. You'll notice that hours can pass without thinking about your trades. This isn't indifference. It's the natural result of your nervous system recognizing that constant monitoring isn't necessary for long-term success. The second sign is improved sleep quality. When your brain isn't treating every open position as a potential threat, it can actually rest at night. Your subconscious stops running trading scenarios while you sleep, allowing for genuine recovery and restoration. The third sign is increased emotional stability during market volatility. Moves that once triggered immediate anxiety, responses begin to feel like normal market behavior. Your heart rate stays steady during drawdowns. Your breathing remains calm during sudden price spikes. These physiological changes create a positive feedback loop. Better sleep improves decision-making. Lower stress levels enhance pattern recognition. Emotional stability allows for more objective analysis. Each improvement reinforces the others, gradually transforming your entire relationship with uncertainty. But the most profound change happens at the level of identity. You stop being someone who trades frantically and become someone who thinks clearly. You stop measuring yourself by daily profits and start measuring yourself by the quality of your mental state. You stop deriving self-worth from being right and start finding satisfaction in being thoughtful. This identity shift is what separates the professionals from the perpetual strugglers. Professional traders aren't just people with better strategies. They're people who have developed a fundamentally different psychological relationship with risk, uncertainty, and the passage of time. Watch how a seasoned professional responds to unexpected market events. There's no emotional upheaval, no desperate scrambling to adjust positions, no second-guessing of previous decisions. They process the new information, consider its implications for their long-term thesis, and either hold their positions or make calm adjustments based on logic rather than emotion. This isn't because they don't care about money or don't feel the impact of losses. It's because their nervous system has been trained to remain stable during uncertainty. Their identity isn't threatened by temporary setbacks because it's rooted in something deeper than short-term results. The amateur trader experiences each loss as a crisis of competence. Every missed opportunity becomes evidence of inadequacy. Every period of sideways movement feels like time wasted. Their sense of self rises and falls with their account balance, creating an exhausting emotional rollercoaster that eventually burns them out. You wanted control. Now you've found something deeper, understanding. The market will still move tomorrow, charts will still form patterns, your phone will still buzz with notifications, but you're different now. You've seen the invisible war that destroys most traders, and you've discovered the weapon that wins it. Your favorite holding period should be forever, not because you'll never sell, but because this mindset transforms how you think, how you feel, and how you respond when uncertainty strikes. The forever mentality isn't just about trading. It's about developing the kind of mind that stays calm when others panic, thinks clearly when others react, and finds opportunity where others see only chaos. If this changed how you see yourself as a trader, subscribe. Let's rebuild how traders think one mind at a time.